Welcome back to another episode of News for Nerds. It is February 2026. Holy cow. We are looking at what has been happening at the beginning of the year so far. So the latest numbers to come out were year to date and pretty much just wrapping up all of January. So we're going to take a look at the local markets, focusing on the big swings and the highlights in each area. And what I've been seeing is basically just a big freeze out around here. If you live anywhere close, you know it's been cold, which has put a damper on quite a bit of the sales activity in the market, but there are definitely a few places that are showing signs of coming back in a big way, even from the beginning of the year. A lot of pent-up demand from, I'd say, all of Q4 of 2025, pushing through into the beginning of this year, and we'll see how that shakes up around Hudson County. Let's get started with Hoboken. All right, so as you see, not a lot of action with single-family homes, just two contracts signed. There has been quite a few multifamily houses, including a lot of beautiful two-family houses that have been on the market and going pretty quickly under contract, but those are not here. If you want some stats for those, I'd be happy to share them with you separately. But let's move on to condos and co-ops, where we're seeing pretty impressive numbers in Hoboken here. So year to date in January are pretty much going to be the same, obviously, because we're just counting 1 month of the year so far. But contracts signed up 15%, active listings up 33% from this time last year. Sales volume or number of sales themselves down a little bit. But again, these are things that went under contract a month or two ago, finally closing in January. And as we know with the holidays and stuff, there's just not a lot of action anyway, seasonally. But that has been turning around, obviously, with the huge jump in active listings. Sales volume down because of those sales that were down 30%. So those match sales volume in terms of price and number of sales, pretty much even there, right around 30%. Median price up 5.1%, which is pretty impressive for Hoboken. We always do see pretty steady appreciation here, but 5% is nothing to laugh at. Average price up just about 2%, but I like the median a little bit more for obvious reasons. And days on market down too. So there are, and I've seen it personally, a lot of people that just came back into the market as soon as the new year was over, or the new year started, I should say. And a lot of activity around. I've seen several places go into multiple offers situations already, but everything is looking good for Hoboken. And if you're a buyer, do not be discouraged, because if you've been tracking it and interest rates are important to you, we are at like a 3-year low right now. And you can kind of see it in this graph down here where 2023, we did see a tiny dip in overall like sales price and appreciation, but that was like the peak of interest rates being 7-8%. Now, at the beginning of this year, pretty much January into today in February, we're seeing some of the lowest rates since 2022 and 2023. So good news for everybody out there right now. All right, moving right over to downtown Jersey City, Hoboken's southern neighbor. We're seeing a little bit of an opposite swing here. So average days on market down, just like in Hoboken. Percent of asking price at 99, pretty steady there. Not surprised to see that. Average sold price up 5%, but the number of sales and number of contracts and new listings all down in downtown Jersey City. So a lot of buyers that are out there that are comparing properties in Hoboken and downtown Jersey City. What I have been seeing is that if you have a certain price point, let's say under $1 million, you're actually not going to find too much stuff in like the 2-bedroom market, let's say in Hoboken, where you have more options in downtown Jersey City. But if you see just like overall new listings, Hoboken has quite a bit more in terms of this January compared to last January. Moving right along to the Heights in Jersey City. That is zip code 07307 for anyone that's tracking that. Let's see what we got here. So houses, not a lot of action. Only 3 sales compared to 4 last year. Only 1 new contract compared to 3 last year. So not a lot in the single family house market. But condos and co-ops, new listings up 21%. Contracts down quite a bit, and I think that has a lot to do with the freeze out we've been having lately. But with those new listings coming on the market, we should see some more action here, especially as the weather gets a little bit nicer. Sunny days are ahead, temperatures above freezing, hallelujah. and average sale price down too. And I think that'll be an interesting metric to track here over the next couple of months as all of these listings are coming on, if average sale price is actually going to tick back up, or if demand is going to actually start, inventory is going to start meeting some of that demand, and we see average sale prices kind of hold steady where they have been shooting up quite a bit over the past couple of years. All right, let's take a look at Union City. Condo co-op market segment here. Quite a lot of negative numbers except for active new listings. So quite a few more listings came on the market here, 64 in January compared to 51 last year in January. But number of sales down a little bit. Sales volume obviously down a bit, and median and average prices down about 25% between the two of those, which is pretty significant. I think a lot of that has to do with co-ops being more prevalent in Union City than many other cities in Hudson County, where we do have quite a few listings at the Doric and Troy Towers, which are very nice, very affordable. You get some really good views up there, but naturally they sell at a little bit lower price than your average condo, which we have seen not as many as I would like to up there recently, but hopefully with this new inventory hitting the market, I've seen several nice ones along Palisade that would and should sell very quickly. But yeah, Union City being a nice, affordable alternative if you are looking in the Heights and want to stay close to Manhattan, but looking for something a bit more affordable, especially in the 2-bed, 2-bath, something with parking compared to Hoboken and Jersey City. All right, up now we have North Bergen. Single-family houses up there. It's a great spot to be looking for suburb, dare I say suburb feel, but still staying in Hudson County, very close commute, and staying, if you want to keep your budget under $1 million there. I'm not going to say there's a lot of things to choose from, but it is an excellent place to start looking or continue looking. If you do want a single family house that is under that $1 million mark or staying close to $1 million, North Bergen is a great spot to check out for sure. But let's take a look at condos and co-ops. Number of contracts signed, almost even from this time last year. Active listings holding steady. We got a few more, 4 more than this time last year. Number of sales down again because of that freeze out that we've been having in the holidays naturally, but that should catch up here through the rest of Q1. Sales volume down quite a bit because we're not having that many sales yet so far to report. But median price and average price, I would say pretty much holding steady. Median price is going to give us a little bit more of insight there, right around 390,000. That fluctuated very little from this time last year. So condos and co-ops holding their prices steady in North Bergen, but we can see kind of a steady appreciation, especially if you compare that to 2 years ago in 2024, where we were seeing like low 300s. Now we're up quite a bit, which is nice. Average days on market dipped quite a bit, so things are moving at a good pace in North Bergen. We're seeing an average lately of 37 days on the market for those condos. All right, last but certainly not least, West New York. Not many things happening in the single family home front, but condos and co-ops. Look at this. We're seeing active listings up 81%. We're at 69 compared to 38 last year. And that is largely due to 2 new buildings that came on the market. Those are on the top tier price point. 8 Avenue Port Imperial, which is called Vista Point, the brand new building from Toll Brothers that is actively being built. They've released a bunch of units there for sale. Those are swanky, and it's pretty much being built right in front of 9 on the Hudson. So not great news for the people that live there that have views that are going to get cut off, but not everyone has their view cut off. But this building is looking super nice. The amenities are very impressive, and the sales team is great. So if you're looking for something literally right on the Hudson, they cannot build in front of you, and you want a luxury building, Vista Point has a lot of good stuff coming on right now. They account for a huge slice of those new listings that came up. And also, a bit more affordable is 519 54th Street. So this is a new building right by Miller Park. Elevator building with parking, which is very nice, but extremely affordable. We're looking at like 3 bedrooms around the $600,000 mark, 2 bedrooms around 550. But that accounts for a big section of those new listings that came on as well. So due to those new buildings and new construction, naturally we're going to see median and average sale prices go up quite a bit. New construction obviously sells at a premium, but average days on market has come up too, because when they release inventory in these buildings, they usually release several of them, and so it takes a little while for those to get bought up. But it's good if you are looking for a nice affordable condo, either in the waterfront or up the Palisade a little bit. We got lots of options for you in West New York. All right, so one more interesting piece of data I want to share with you guys if you've made it this far and you're interested in this kind of stuff. And a big reason why we're seeing a lot of activity here in the market and more homes coming to market, which is always good news, is because the amount of homeowners that have been feeling stuck with the golden handcuff situation that we've been calling it, where you have a mortgage rate that is just too good to give up, is shrinking. So you can see from this graph here, the number of homeowners that have a rate below 3 is now almost even with the number of homeowners that have a rate above 6. So that means basically anyone that's not so many people have refinanced, although certainly a section of the market has, but just new people coming to market, first-time home buyers that have bought in the past couple of years where their rate is above 6. It's the new normal, and that's a great way to think about it. But also a big section of this too are people that had to move or decided to move and finally give up that rate below 3 because it was just worth it to them in the end to have that new house that just suits them better at a higher rate. So this is actually really good news for everybody. It's going to continue to release up some inventory for the buyers that have felt like there's not enough out there to choose from, and really just kind of getting used to the new normal. I've seen several headlines that mortgage rates obviously have eased a lot over the past 3 years, and the forecast is them to dip slightly more in 2026. I'm a little bit skeptical about that. I think rates obviously are very volatile with a lot of news in the market, and I don't imagine that they're going to come down much more than this throughout the year, maybe slightly, but good news in the financial markets and across the globe is always good news for rates. So again, I don't imagine them coming down significantly into like definitely not the 3 or even 4% range. Maybe we'll see like high 5s for a little while, but around 6, let's say, is the new normal, and let's hope that it holds steady here for a while. But it is really good news for buyers and sellers throughout the nation. So cheers to that. And here is just one other slide kind of illustrating the same thing. So this is purely just the number of mortgage rates nationwide above 6% have really reached a 10-year high here. Only really outpaced since Q2 of 2014. So let's continue to watch all the news together, shall we? And I will see you here next month on another episode of News for Nerds. As always, thanks for tuning in. If you like any of this stuff in your inbox, always happy to share it with any and all of you. Feel free to DM me, give me a call, text anytime. I'm here for all of you. Take care, everybody. Hope you have a great Valentine's. Bye now.